Good morning, ladies and gentlemen. My name is Uwe Heim. I'm a Senior Managing Director of Ancora, and I'm really happy to be the moderator today of this very interesting and important panel, KYC Best Practice. In our panel, we have really experienced participants from very important companies and organizations connected to this issue. At first, it's Tanja Birkholz, the chairwoman of the board of directors of Schufa Holding AG. It's Thorsten Höche, chief legal advisor of the Association of German Banks in Berlin. Dr. Thorsten Pölsch, chief executive officer of the Federal Financial Supervisory Authority of Germany in Bonn. And also Thilo Walter, the CEO and founder of the Peltoril GmbH near Frankfurt. Next step, we will start with the introductory statements, and I lead over to Mrs. Birkholz.
Thanks, Uwe. Well, first of all, a very warm welcome to this, as I heard, very, very international audience. It's a pleasure having the opportunity to be on this panel today. Maybe a short background to myself, because we are a very German panel and very international audience, so I think it needs some explanation. As Mr. Heim just said, I joined Schufa last year. I'm chairwoman since mid of last year. I have been a couple of years before with a strategic consultancy firm, and have been before that for nearly 20 years with Commerzbank, a large German bank. Thereof the last 9 years as divisional board member for finance and risk. For the international guest, what is Schufa? Schufa is Germany's leading credit bureau to have 93 years of history in customer identification, risk management, data management, as well as data security. Beginning of last year, Schufa founded a joint venture together with Fino, a fintech. This joint venture is called Clarilab, and the product or solution site is called KYC Now. With Clarilab, we combine the best of two worlds. Clarilab is a vehicle which is naturally digital, which is can very strongly deliver on the pace and the new ways of thinking and client centricity. And this will be a focal point in my statement. While on the other hand, Schufa is bringing its unique data set as well as its rock solid and trusted security standards to the table. Clarilab has proven its expertise and very fast execution ability when we provided solutions for the fraud-proof payment of Corona subsidies. The build has happened in only two weeks. So the basis has been the KYC modules, and more than 700 banks and over 13,000 users trusted the solutions with very great success. So what client demands do we see? What client challenges? What trends when we look at the client side? It's more or less threefold. Firstly, it's to rethink KYC from the customer perspective, from the customer experience. KYC has developed more or less as a fire drill, a project mode execution in organizations. And nowadays, it's all about customer journey, customer centricity. That's for competitive reasons. And it has been understood that KYC and AML, as all risk measures, need to be fully integrated in processes on this customer delivery. That is crucial for all sectors we serve in order to ensure speedy and high-class services to their customers. Secondly, ambition is to ensure effectiveness and to leverage on strategic opportunities, on strategic perspective on KYC. We heard it in the panel before, that was all about tick boxing, and that is true. We see many institutions still being overwhelmed by the pure mass of work, of reviews, and resource allocation still needs to be transferred from the lower end of value add to the high value adding tasks like definition of risk type, appetite, high risk monitoring, heat map monitoring, etc. So that remains to be one of the key challenges. And thirdly, and that goes hand in hand with the second one, to manage complexity and operating costs. This fire drill mode I just mentioned in the very early years has led to high complexity and a vast expenditures, vast amount of money. And very often that is not going hand in hand with really effective and a strong compliance culture. So time has come to optimize these KYC mechanisms while at the same time improving effectiveness and the strategic leverage I just mentioned. As SUFA, we consider KYC indeed not as a tick boxing necessity which needs to be done. Our ambition, our mission is really to serve our clients to get the costs down or at least transfer to this effectiveness and have a competitive client lens on what we call the regulatory requirements. So what does it mean? What solutions do we offer? What is key or unique to SUFA's solution? Well, first of all, it comes to a very unique data set in Germany, which is supplemented by the key international leading suppliers on international data. Then secondly, we have what you could call the Autobahn to many, many clients in Germany, corporate clients. It's about 10,000. So if you think about data exchange and a fast push of data, we would have the network, like an electric utility, we have this Autobahn. And what is unique as well, I would like to mention, is we call it one-stop shopping. We strongly believe with regards to this managing of complexity that you have to offer one-stop shopping, like the whole breadth and depth of the value chain when we talk about AML, KYC compliance, as all other means to integrate it in the solutions in the client-centric solution I just mentioned. And we often observe that many, many vendors are being used, which again increases the complexity, though that's why we clearly have a value proposition called this one-stop shopping. For sure, as I just mentioned, we have the KYC A to Z modular services. So we have a view on the specific customer, what suits best for his customer journey end to end. And as just mentioned, I mean, I think that's certainly we have this deep automation and the seamless digital processes, the competencies to execute on this. And we have the plug into the private as well as the public data. So that is more or less key. Maybe to mention, because I think we will come back to this on artificial intelligence and data analytics. SUFA is on a European level the only private company which together with different research institutes is working on what we call no bias in artificial intelligence, which will become a hot topic in regulation as well. You know, how to use artificial intelligence. Regulation is coming on that one. And it is important for us because we are on the scrutiny of the public opinion to really use artificial intelligence in a very controlled way to ensure transparency and explainability of artificial intelligence. Nevertheless, it's a great means and in the lever when you have a look at data, and I'm quite sure we come back to this. So when done right, clients end up, and that is the ambition we ourselves stick to, with a more or less highly competitive customer journey. And I really will highlight this in this session today. Is operational costs and resource allocation, which is driven by high value add activities and a strong compliance culture, which understands and detects high risk events at a very early stage. And we will come back, I think, in the discussion later on which measures we really need that institutions can build this strong compliance culture, because right now they are really under the burden of this often tick boxing exercise. And I think we really need to transform this, and that needs close interaction with all market participants. So in a nutshell, KYC is not only about operational excellence, it is about building a competitive advantage and building really a strong compliance culture. Reputational risk is a key issue for the years and the decades to come. And that's where we want to serve to.
Tanya, thanks very much for this interesting statement. I understood that digitalization is one of the key factors also for your company and your services. How do you currently assess the status of digitalization in Germany's KYC processes?
As indeed, it's a key lever you just mentioned. Well, digitalization on client onboarding KYC has certainly matured since we started with the video ident. I think it was in 2014, so a couple of years ago. So we made a major step ahead. However, there are very, very different maturity levels if we look at different banking segments and different use cases like smart identification, multi-channel enablement, etc. We still observe, as I mentioned in my statement, we still observe that the clients have bits and pieces being digitalized, but very often not the whole customer journey, from back to end. So very often it stops, at the middle or back office. It doesn't help if you want to serve the client with speedy and high-class services. There is still this high systems and vendor and process complexity I mentioned, and thus still quite a focus on what we would call more the standard exercises, the mass exercises, and not the real class. It's more or less about quantity. Still we haven't made it, to make this jump to the quality, because there is still at least some leeway, let's call it, on digitalization measures which we have to take to come really to effective measures on KYC.
Mm-hmm. And so at least I believe that we are very far in this development in the private sector, but all the processes regarding KYC are also connected to processes where also our law enforcement and regulatory authorities have a stake and are important with information. I think the first step, a very good step, is the setup of the transparency registers in Europe. What would be your first measures if you could decide on cooperation and data exchange with authorities?
So that's nice that you give me the authority to discuss or comment on this, at least for the next couple of seconds. It has been mentioned in the panel before. I mean, I think key is that it really becomes to joint effort of all market participants. It's very speedy and close interaction. Honestly, if I look at what we are doing right now, it seems to be rather an individual play than a real team play with hard pressing against the opponent. I think we have a purpose behind this, which has been greatly discussed before. So I would really argue for this close interaction. We will only win and fight against fraud as well as money laundering if we do it together. Secondly, and German legislation has just decided otherwise, but I think it is key that there is a direct access for every market participant to the public data, and not having this data scraping, etc., but real direct access. And thirdly, to accept that something like a market utility makes sense. I mean, if you really want to have effectiveness and strong compliance culture in companies, in organizations, I think we have to admit that there are some standard tasks which shouldn't be done by each company by itself. I mean, there's lots about cost sharing, know-how synergy sharing, I think, and we have really leveraged on that one. As I just mentioned, we have a network to 10,000 corporate clients in Germany. So why should everybody, build its own RP layer or its own interface to the transparency register? So why not use these networks? For sure, the organizations then have to focus on the high risk monitoring, etc. That is their duty and can't be done by someone else. But if we really want to have this effectiveness in fighting the enemy, then we really have to think about some sort of role sharing between the different market participants.
Yeah, thank you very much. I also believe and can underline that fighting money laundering, it's really a common action where every participant has to work close together and share data and help each other. Only with this common work we have a chance to be successful in that field. Now, next panelist, Mr. Röchel from the German Banking Association, closely working together with Schufa for long years. Happy to hear your statement.
Yes, thanks, Mr. Heim, and a warm welcome from my side as well. I'm quite honored to be a panelist with an audience of so many distinguished auditors from so many countries all over the world. And we give you, as Tanya already said, maybe a flavor of a German interpretation of AML, and but I think it's pretty many international points. So maybe some words on myself. I'm working for the association, German Bankers Association, since 1995. For the first 10 years, I did AML hands-on as a legal advisor in the legal department, and since 2005, I'm managing director and general counsel of the association. And it was my pleasure to serve as chairman of the AML and Anti-Fraud Committee of the European Banking Federation. My old colleague Sebastian de Brouwer, we will meet in panel number 3. So an old colleague of mine, and I had the honor to participate in the last few rounds of the FATF evaluations in Germany as a member of the bank's delegation or association's delegation. So when I thought about what could I start with my presentation, I just was wondering what's the core of AML? What was it at the very beginning? And I think it's still the idea that it's 3 pillars of AML measures, and 3 pillars, and that has to be kept in mind to get criminals, organized criminals, off the street and get hands on their money. I think this is something that's the ultimate goal that we have to keep in mind. And KYC measures is, of course, a very basic first pillar. It's a very important one. But meanwhile, when I look at the road that we have traveled since the 1990s, I think it's one of the pillars that has to be, which has exaggerated a bit in practice, because what Mark Peet in the previous panel has pointed out is that banks really are afraid to make mistakes in AML, and mistakes can easily be found out in the KYC pillar, because it's very easy to find mistakes in documentation and so on. And this is of course important, but as the technology has evolved, and as especially since suspicious transaction reporting has become so massive all over the globe, I think there are the core modifications that have to be done in the near future. So what we on European level, and supported by the German Banking Association just as well, ask for the next reform of the European legislation is to be very concise and very precise as regards KYC regulation, and to differentiate the objective data points which we need to identify customers, may it be natural persons, may it be company customers, to differentiate the data points that are objective and that are the basis for KYC from the risk-orientated data points and risk-orientated information. And this is where the core presently lies, and this is why concepts and projects like TMNL in the Netherlands, which have been discussed in the previous panel, are so important to get better results from AML in exchange between the public sector and the private sector. So if we look at the things that are now in place as regards KYC, Tanya has pointed already out, I think the main drivers that we have right now. Transparency registers for gaining the information about beneficial owners are very key, and they are the chance to get much better information, much better results if the registers themselves will be strong ones. I think we are not there on the globe in different jurisdictions. Transparency registers have to be developed to interact with under themselves and offer reliable data to the financial sector, which then can use this data for the measures on top of that, for transaction monitoring, for solid suspicious transaction reporting, which is then the key information for law enforcement to do their job. And this is the other very important discussion which is led right now on international level, which of course we support. This is a private-public partnership. And I want to be quite concrete in one point in this respect. I think it is very important to exchange information between public and private sector. It is very important that the public sector, the different authorities exchange information among themselves. but there has to be a very solid legal basis, and I think we have to be very clear what we're talking about. We are talking about information if we want to have fruitful suspicious activity reporting for law enforcement and police. We need extra information exchange in the forefield of what we call suspicion right now. And that is, for many, many jurisdictions, an important legal question that has to be solved. Because if you compare the system which we have now to a future system, the numbers of SIRs are rising through the ceiling, and the number of convictions, not only in Germany, but in Germany as well, is very, very low. And it has been low since the beginning of AML regulation all over the globe. And if we want to improve that, we have to raise the quality on both sides. And very often, and I have that for decades, from the police side as well as from the banking side, very, very often colleagues told me the missing link, the missing information is just on the other side. So if we are not finding, let's say, the ordinary crime with every society has to deal with, if we really want to fight crime, organized crime that is really a threat for society, then we have to concentrate on criminal groups, then we have to concentrate on money flows, we have to concentrate on international cooperation of criminals in a way that is really efficient. And I think this must be an important point for the next regulation round, and I'm quite confident, and we have high expectations what the European Commission will come about, hopefully in July this year with a new regulation on AML. I think Dr. Pitch will talk about that. This is something where we expect a shift to a higher level, and of course KYC will then have to play its role, because, as I said already, it's the basis for all the topping up measures which then should get the premium for all the effort that we do all together. It will not work without cooperation, but there have to be solid rules as a basis. And if this all comes together, then I'm very confident that we will have better success than we had in the last 25 years. I think I'll stop here and leave the rest open for questions.
Yeah, so thank you for your statement. I see here that you have already answered a lot of my questions during your statement. So I like to ask one question. In your opinion, what would a KYC system at banks look like that is actually suitable for preventing money laundering and identifying perpetrators? What is efficient system in banks that helps everybody to fight really against organized crime?
Sam, I would start the other way around. I think what's not sufficient is when two compliance officer groups of two major banks, one in Europe and one in the US, talk half a day to each other who the other one might be. That's not efficient. Yeah. And this is why I think we need clear rules, mostly on global level. I know that this is difficult, but at least on a European level, we need clear-cut information, objective information, and it's not rocket science. I mean, it's easy to find out from this objective kind of data who Torsten here is, where I live, what's my birth of date, and these things. I think they have to be very precise. And if we come to the criteria, and this is the borderline between KYC and additional risk-related measures, then we come into those fields where subjective information is important, and where values and more investigation of addressees of the rules is necessary. And I think to differentiate these rules better, to make the first pillar clearer and harmonized on international level, much more than it is today, that would be a solid basis for everything that comes on top. And on top, I see a lot of opportunities for more technology. AI is, quoted by everyone, artificial intelligence. Personally, I believe if we get operational data from the banking side and from authority side together, it must be a perfect field for AI technologies. This is why I believe it is one of the fields in banking which is very, very attractive for measures in this environment. And I think if the pillars work together in this way, I would then say that we have a KYC system that serves the overall system, and we will have better results.
Yeah, thank you very much, Mr. Röche. Yeah, now I'm really happy that we not only have participants from the market, from the banks, from the provider. We also have here on our panel Dr. Pölsch from the Financial Supervisory Authority, and now I'm really excited to hear his statement from BaFin.
Thank you. Thank you. First of all, thanks for having me here at the AML and CFT Conference of the International Bankers Forum. I'm a member of the management board of the BaFin, and therefore I'm responsible for such nice areas as resolution, banking resolution, and money laundering prevention. And sometimes problems with money laundering prevention and resolution of banks go hand in hand. So beware at that particular point. We've seen that in the past. Of course, it's a great pleasure here to join this very interesting panel. And I would like to share some thoughts with you, which I think are very important and forward-looking. Thorsten Oecher has already mentioned the forthcoming EU regulation, and I'd like to share some thoughts on this forthcoming regulation with you. First of all, I think it's important that Europe is at a turning point right now. We pick up speed after a thorough phase of preparation. And this is good. I'm talking about the rollout of a completely new regime on money laundering supervision. And the plans for a new European supervisor have cost preparation time, but now they move forward with great strides. And this leads exactly to the point that we now have the chance to create something new, something really from scratch. Most likely, in June, the Commission will publish a new legislative proposal with further details, and we will have a new anti-money laundering authority called AMLA or AMLA. I don't know how the pronunciation will be, but I think it's AMLA time right now. Now, this new piece of legislation shares a lot of risks and a lot of opportunities. And I'd like to point out a couple of these risks and opportunities. Let's take a look at the framework. We have the opportunity for a complete set of truly harmonized rules. Most of you know here in Europe, we have an EU money laundering directive, which is not immediately applicable, but which needs to be transformed into national law. Now, what we will have an EU money laundering regulation, which is directly applicable and which is a lot of differences within the EU member states disappearing. This is an essential precondition for proper supervision of institutions located in our 27 member states by one centralized authority. We will also have a challenge resulting of this. The challenge is that not all member states seem to share the same willingness to give up parts of their national sovereignty. Some search advantage in a leak implementation at a EU directive, but let's be very blunt about that. Foreign shopping must be stopped. We all need to reach out for the same goal, creating a level playing field, which is very important, a level playing field in order to combat money laundering more efficiently and to prevent regulatory arbitrage. Well, the risk is very clear. The risk is that we do not reach consensus among some elements of this full harmonization, and some elements must be sacrificed. But we all need to be aware that some half-hearted compromise could undermine the whole entire project, particularly in core areas. We've talked about that early on, KYC, which we talk about later as well, or suspicious transaction reports. We need to close loopholes. Regulatory technical standards will then be implemented and provide for the uniform application in these areas. And with these full harmonized KYC rules, it will be easier to make progress in the digitalization of KYC process, while finding solutions for detention, and that is a big problem now, the tension with the data protection rules. AML and data protection are not, let's say, really twins, let's put it that way. Therefore, you have, of course, a certain tension, and this tension has to be released at the proper level, and the proper level is the EU level. So therefore, I would really appreciate if the data protection problems and hurdles that we face will be addressed at the EU level as well, and will be a part of the new EU legislation as well. Mm-hmm. Let's take a closer look at the architecture of the new authority. We have an opportunity here as well. The AMLA can bring a real added value, a new supervisor for cross-border supervision, fully equipped with the necessary powers, which in my point should definitely include direct supervisory powers over risky financial institutions, which must include direct sanction powers. What we do not need is another supervisor of the supervisors. And in addition to that, a systematic cross-border feedback mechanism from the financial intelligence units would provide another source of fundamental and valuable information for an effective European supervisor. The challenge here is also obvious. Not all member states share the same willingness to give up parts of their national sovereignty. But that's a problem we are quite familiar with from a lot of EU legislation projects that we have. One thing is very sure, that national authorities will still play an important part in this game. So we'll have a coexistence and an involvement of the NCAs in the future AML CFT prevention. And this is not necessary, but also desired. Of course, if you have two players in the game, you have to really allocate who's responsible for what. So therefore, we should avoid frictions by duplication or overlapping of responsibilities. We need clearly defined responsibilities between the AMLA and the national competent authorities. That's obvious. So the AML should be focusing on the cross-border institutions, while the solely domestically operating institutions will still be under NCA's supervision. Whether there might be another criterion as well, a criterion that, for example, very risky operations which only run in one member state should also be part of the European supervision, will surely be a point that will be discussed in the forthcoming EU legislation process. But I think it's safe to say that we are now at the brink of a very, very important step, an ambitious step, but I think we can tackle this together, and it's a joint project. And I'm sure this project will be a success project at the end. Thank you.
Thank you, Mr. Purch, from this very interesting statement. Yeah, some questions from my side. What powers should the new authority have?
That's a very good question. But first of all, the new AMLA should have direct supervision powers. That's obvious. It should have sanction powers. And we should address the problem of risky financial institutions across the European Union. So we're talking about cross-border supervision and a supervision about the very risky financial institutions. The supervision benchmark will be defined on whether a financial institution will have the capability to harm the financial stability of the European Union. So what does risky mean? Risk must mean a situation where the financial stability of the European Union can be at risk. That would be my definition for that. And then the AMLA should act as both a so-called watchdog and a facilitator for a network, not only between the different national competent authorities, but also for the FIUs, the financial intelligence units as well. And the most important point is that there should be a clear understanding on how the interaction between the new authority and the new AML NCA should look like. As I've mentioned earlier in my short statement, everybody has to really know his or its role in the game, otherwise you will lose the game.
Yeah. What is the requirement for the new authority to be operational?
That's very, very clear. The basis of this adequate operability of the MREL must be a single AML rulebook. We will all have to put after one rulebook. And that must be published in the form that gets very technical, but it's important, of a regulatory technical standard. So the rule book should be precise, it should be concise, and everybody should know these rules. So the aim is very clear, to harmonize the AML, CFT regulation across the European Union, and especially in two areas, the customer due diligence and the ultimate beneficial owner identification verification. These two areas should especially be standardized across the EU, because it's very obvious if you look at the different member states, you sometimes get the idea that you're in completely different movies as far as these topics are concerned, and that should definitely stop. That would be my answer to that particular question.
Yeah, thank you. You also strived rules. Rules are connected to guidelines. What are the topics of the specific interpretation and application guidance notes, and what are the next steps?
Yes, and in Germany we have the so-called Auslegungs- und Anwendungshinweise, the specific application and interpretation guidance notes that we've recently published here at the BaFin. We have a couple of different topics. For example, I'd like to mention not all of them, otherwise time would run out, but just a couple of them. Source of funds. Source of funds is very important in connection with cash transactions. Every criminal likes cash. Real estate transactions. We have investment business rules. We have rules on syndicated credits and on correspondent banking. We've seen the big cases in the past that correspondent banking can be used as a tool for money laundering, and therefore this is a point that we've recently addressed. Of course, monitoring systems are another problem and another area that is part of the interpretation and application guidelines, and trust accounts are a part of that as well. Thanks.
Yeah. Thank you, Mr. Pötsch, for your statement and the answers. Now I lead over to the statement of Thilo Walter.
Yeah, thank you very much, Uwe. And it's a pleasure for me being here at this very international conference of the Maliki Group. Yeah, first of all, some sentences to my person. I worked for many years in the credit bureau industry. I've worked at Schufa, which is here at the panel as well, for more than 10 years, and started all the B2B business, the KYC products, with a big pleasure. And then I wanted to take the chance to found an own company, which I did 7 years ago, which is now called Paltorei. And we are now 50 people in the US, in Poland, in some parts of Europe, focusing on bringing data together to form big networks. Because what we believe is that one of the key root causes of problems in the AML processes is that every company just focuses on company by company by company. That means, just imagine a new customer comes to a bank, and then you set him up in the system, and you just create a new entry in your CRM system, and you try to get some information, who's the UBO, and then it's done. But you can be sure that if you're a big bank and you have thousands of customers, all customers belong to each other. It's a huge network. Everybody belongs to each other. And normally, just when a new customer comes into the bank, you should immediately not only check who's the ultimate beneficial owner, you should check as well whether he's involved in which other companies, in which other transactions, because it's a huge network. They all belong together. And this is what we believe is that due to the history where we all started with index cards, we just store data about companies or persons. And even the CRM systems, the banking systems, they are all just digital index cards. You have more and more data about single entities, but you have no information about the relations within those entities. And this is where we believe the systems and the thinking of the people within the AML business has to change, that they acknowledge that every company and that every person is part of a huge network. Because I'm pretty sure just this panel, Mrs. Birkhoff and myself, we just belong to each other because we spent together at Juve, and we know a lot of common people, and it's a huge network. And once you acknowledge this, you have a totally different new view on your people. Of course, you will check the UBO, but does any bank check from which other companies it's this UBO as well? Not really. So you just know he's the UBO of this one company, but perhaps he's UBO from 10 other companies all over the world, and we do not know. And this, I think, is a huge gap in the thinking that we only focus on single entities, and we do not see the whole networks which exist in the global economy. And if we want to fight money laundering, and if we want to fight anti-financial crime, we need to get much more transparency in the relations of people and companies. And it's not only the shareholdership, which is represented by the UBO. Well, we think if he is UBO, he can influence and has the power to influence business. But we have to have much more information. Who's in the boards? Who's in the leadership of companies? Who's acting? And how are all these leaders act together? And this is a totally new view we can gain. And in the last year, so in the last 10 years, there came up a new technology like the graph databases. And I strongly believe that using different technologies, more modern technologies than previously, enables us all and give us the power to fight financial crime much more powerful than we did in the last years. And this is what I think is important. And you just don't need only the technology. If just somebody wants to create a network out of its own customer data, it's nearly impossible because you have just digital index cards. I think we need a unique network which covers nearly the whole globe with all the entities, with all the companies, with all the people and the relations. And then companies can match their existing customer data against this network, and immediately you see how all the relations with each other. And this is what is the purpose of our company. So we're not a credit bureau at all. We just help companies to detect the relations within the dataset with a huge graph containing 70 million companies all over the globe, more than 1 billion relations, and a huge analytics and AI framework discovering all the potential money laundering things in between these companies. And I think this is a new approach, it's a different approach. It's more than trying to get the ultimate beneficial owner in a very efficient way, which I think Rebecca's pointed out very correctly, that it should be a chance and not a pain. But I think there's more behind it. It's more to get a deeper insight in this person. And I think it's possible. You just need the technology. You have a huge cloud-based infrastructure. Even every bank can have this kind of network within their systems. And we work with quite a lot of global banks providing this network into the system. And it shows up that it's a huge benefit for analyzing these financial fraud. And I think this would perhaps just to start as an initial statement. And I'm happy if you have some questions to this, probably a little bit different approach.
Yeah, thank you very much. So from my experience, and I only can underline this also when I was with the German Federal Police Office, and we investigated against organized crime groups beginning of the 2000s. We noticed that we had to investigate not against one person, but against a network over 17 countries in one case. And also when I look in my engagements for banks, in big fraud cases, carbon trading cases, and so on, it's easy for a criminal person to understand KYC processes that a bank is only obliged to check the direct client. And if I know this as a crime person, I can set up a crime network where I completely approach the banks with companies that are completely in line with regulations, and I do my criminal business in behind. And nobody can detect this because there's no focus on the network behind. KYC should be able to recognize this, but it's not necessary. You only have to identify the one customer, and So it's an absolute intelligent way to do KYC, looking in the networks. And I believe we have to think about, is it already the task of the law enforcement authorities to do that? or can we help the law authorities to bring a better quality in the outcome based on intelligent KYC processes? What regulatory improvements could be made in Germany to make KYC processes more efficient with intelligent network-oriented databases, from your opinion?
Yeah, I think there are two approaches. The one thing is, honestly, I'm not really a fan from just there's a regulation, a bank has to know who's the ultimate beneficial owner, keys it in the system, and it's done. And this, honestly, we all know this does not really help to fight financial crime, because if I want to make some money laundering, I will not really be caught by those kind of analysis for banks. It's a lot of work, and it's important to know it, but it's not KYC if you say know your customer. It's not knowing your customer, it's know the UBU. And knowing the customer means know the structures behind the customer, know the people. And this is, I think, in the authorities, this should be discussed, whether this is an approach to really fight against financial crime, because this is what we all want to do. We do not want to spend a lot of money as a bank to fulfill some regulations. So on the one hand, I think this is one thing we should do. And the second thing is, once you have this network, banks should think whether they have integrated these kind of networks within their systems, because then it's not a one-by-one case, it's not a monitoring, it's not just every 1, 3, 5 years you update some data. I think this is an old approach. You can have those data instantly in your system. It's like the pre-filled database included in the system of every bank, which should be shared with the same ID with authorities. And then you can really match those data between the authorities, between the banks. And I'm pretty sure you spend less money, you're faster, and you have better chances to fight financial crime.
Yeah, so you think, or my next question is the technology to automate KYC processes in that way, end-to-end, already available, or are we speaking from science fiction?
I think, of course, it's not science fiction. I think there are a lot of technologies. One question is, how fast can the banks implement these kind of technologies? Because we all know they have a lot of legacy systems, they have old systems, and it's not so easy to, if you have an old, your customer data in an old host system, it's not so easy to make a real-time KYC check linked to these customer data and transaction data. I think theoretically it's possible from the technology. We have graph databases, we have huge data lakes, we have huge infrastructure where performance is not an issue. We gather data real-time. But the question is, how quick can the banks integrate those applications in the infrastructure? And this is what I see a lot of time, which we need to close this gap.
Yeah, and where do you see the limitations in using modern network-oriented databases for KYC, and how can these limitations be extended? You just said massive data, different systems. What are the points we have to take care to make it possible to approach such a modern standard?
I think there's always one big risk. I think we all know all around the world we have a lot of data, more data than we can really use. And there are a lot of ideas that you gather more and more and more data, and you think you get more and more insights. And I don't believe it, because there's a crucial point. You have to take the right data in the right format. And therefore, I think a very modern, flexible data model is very important, because otherwise you have too much data, and it will be, on the one hand, it always becomes a performance issue. If you analyze huge networks, huge graphs, it will become a performance issue of too much data. And therefore, you have to have a very precise data model which fits to the requirement which is had, which it should fulfill. That you really have the best information, the best analysis, real time, and not a huge data storage where you do not get something out of it.
Yeah, thank you very much. So now we are coming to the open discussion. I just look on my WhatsApp, and we have currently no question from the participants in this call. And I'm happy to motivate every participant. If you have questions, please ask these questions. I can take this here in the discussion immediately. The next step, we just talked about efficiency and technique regarding KYC processes and have seen what is possible from Thilo Walter's introduction. Mr. Höche, what do you think? Are the German banks prepared to implement such a technique?
Well, I think the main question is there support from, let's say, the authority side? Can we agree that this is a next step that will lead to better legal certainty, that will lead to better results? I mean, of course, there's lots of opportunities, I think, for new technologies in the AML field. But if I look, especially in the KYC field, if I look at different approaches in Germany to set up a KYC utility, there are still different vendors on the market, and there hasn't been built something like a standard up to now. So, and the other thing is that technology is evolving very fast. I think the technology is a tool. I think the first step for us must be to find a basis what, under the new regulation, that it will be built on scratch, which Thorsten Pötsch just said. We have a chance setting up a new scenery regulatory, and then find out where are the fields where we can use the most efficient way to build up a system that will lead to the best results we can get. And again, as I said at the very beginning, the results is not that we get no problems in auditions or something like that. The results must be that we have a better fight against organized crime and terrorism financing than we have before. And that means that everybody has to play a role. That's law enforcement, that's police, that's of course supervisory authorities and so on. And then we have to agree on the new set of rules, and then that this is the following, is the subsequent step. Then look for the best technology to solve these problems for us. But I know I can easily imagine that it will be a heavy investment. I can imagine that my colleagues will be willing to do so, but they will have on the other side they will see the light of a chance that they can fulfill their obligations with these tools in a safe manner. That will be a key issue, of course.
Yeah, thank you very much. Another question to Mr. Pötsch, directly to that questions. How is the regulatory authority engaged to support this really efficient processes and bring the best technique and efficient processes into the banks?
Yeah, that's a good question. We have, let's say, two areas in which we move. The first area is that we've started, I think, 2 or 3 years ago, together with the Financial Intelligence Unit, the AFCA, which is truly a public-private partnership, and where we all strive together to find the best ways in order to deal with the problems that you've just mentioned. We have at the AFCA, the Anti-Financial Crime Alliance, where a lot of banks are involved, but also the Federal Criminal Police Office, the FIU, and the BaFin. We have at the AFCA a dedicated work stream which has a lot of priorities regarding technical solutions to improve the transaction monitoring and to strive for a common understanding on the current state of innovation and new technology. So therefore, this technical work stream is very, very important as far as digitalization is concerned. The second major field is a field that is especially here at the BaFin. We have recently published, very recently, in fact 3 days ago, a paper on big data and artificial intelligence. What we expect from all the market participants as far as algorithms are concerned. So I strongly recommend reading this paper on artificial intelligence and big data. Apart from that, we have what we call an MVP portal, where we have a tool for data submissions by institutions, as I think every good authority has. These are, let's say, by taking a look at the time, these are the two main areas itself within BaFin and together with market participants on our sector that we feel these are the two ways where we address the problem you just mentioned.
Yeah, thank you very much. Now, only time for a last question. And I believe fighting against money laundering is not only a one-sector approach. So we have a lot of issues outside of the financial industry, and there I see also in KYC many improvement potential. And this is my last question to Mrs. Birkholz, because I know that Schufa is already on the way to develop things also for sectors outside the banking industry. What do you think is the status there? So we can just not hear. Yeah, so I believe the technicians from Mr. Maliki are now convinced that we are coming to the end of our session. Thanks very much. For me, it was a really great, vital, and interesting discussion from many aspects regarding KYC. And my last task is to introduce the next panel starting in 2 minutes about KYC best practice machine learning to improve transaction monitoring efficiency. I think we prepared this topic really good for our colleagues, for our following colleagues. Thank you very much, and have a good day and a nice weekend. It's Friday, yeah? So.